What's going on, everybody? In this video, I unlocked the secret to day trading. You see, over the past few months, I've been analyzing my trading methodology and I found the flaws within.
My first thought, torch it. But saner heads prevailed.
You might even say I found the secret to limitless profits. So in this episode, things get risky as we cross a major milestone. We're going to go over what I discovered, apply the method, and see what the results are. If you're new here, I'm Jordan, and this is Degenerate Candlesticks. First off, I want to give a big shout out to those who already joined our Discord. I will often live stream videos early on Discord as a little perk for those that have joined up. So be sure to check that out if a community of like-minded degenerates is something you're interested in joining. A link will be in the description below. Day trading is a mental battle. It's you against the market, and the market has every advantage and none of your weaknesses. While every day trader's battle is different, we all have the same goal, and that is to rise to the top and make some money. So let's go over my methodology and how I plan to get there.
And you know how they say that we can only access 20% of our brain? Well, what this does, it lets you access all of it.
Now, to test my methodology, I'm not going for extreme profits. I'm going for consistency and accuracy within my trades.
Look, I have a plan, I swear.
I would much rather have profits of 20 cents than to have any sort of loss. So that's what I'm going to be striving for. For my studies, I'm using the VWAP, seen in light blue. While I don't find it to be the most important indicator, if the stock is trading above or below the VWAP, I can use that information as an indicator to the stock's possible trajectory. I'm also using Bollinger Bands, seen in red, yellow, and green. And I actually recommend having them colored this way, as when the candlesticks are approaching the top Bollinger Band in red, it's a reminder that we're entering a bit of a danger zone. But if the candlestick dips down and bounces off the green band, I know this could possibly be a good entry point to get into. The Bollinger Bands are the most useful study in my opinion. I also use the MACD and volume average, both of which are just used as signals onto when to enter the trade. The MACD can be a little bit more useful as it also displays a bit of a trajectory, where the volume average just shows spikes in trading indicating heavy momentum. The stocks I trade must meet certain requirements. This is where the scanner comes in. For example, I'm only going to be trading stocks with a higher than average relative volume. I'm looking for at least 2 times higher or better. This can be added to Thinkorswim via some custom scripting. The stock must already be up at least 6% on the day. This usually is already accomplished pre-market, which is relevant later. Ideally, the stock is between $2 and $5. If the stock meets all of these requirements, I will consider trading it. When it comes to the actual execution of the trade, there are key factors I'm looking for as well. All of my orders are market orders of 100 shares. Due to my small account size, this is my default order. I like to buy in 100 share increments because it makes it easier for mental math. When you buy 100 shares, 1 penny equals $1. When you buy 200 shares, 1 penny equals $2, and so on. My goal is to try and anticipate the momentum by watching the amount of incoming trades via the level 2 and the volume average. In my mind, and I'm sure many others, quarter points like 25 cents, 50 cents, and 75 cents are often hurdles. If the stock is able to break over one of these points, it often indicates strong momentum. If you're lucky enough and have enough skill, you can even anticipate these breakpoints to secure even more profit. If you happen to catch this moment when the stock is approaching high of day or the pre-market high, that's when you take the trade.
Works better if you're already smart.
So this is my strategy. But now it's time to apply this methodology and see the results.
In the end, how much worse could it get?
After starting my account over, I've been having a good run, but I'm still in the danger zone, and one really bad trade could end my account.
Are you listening to me? Do you get it? You are gonna be out on the streets.
And then,
For my first trade, I bought 100 shares of BURU at $2.58. Things were a little rocky for this first trade, and I ended up selling at $2.58 and a half.
obviously I miscalculated a few things.
For For this trade, there were a couple of things that went wrong. Ultimately, I let my emotions get the best of me, common trend, and I jumped in too soon for this trade. I can only give myself 2 out of 5 stars. Hopefully the next one will be better. For my next trade, I bought VRPX at $3.22. I ended up selling at $3.30. Overall, this wasn't a bad trade. I'd have to give myself 4 out of 5 stars. Now, at this point, I'm feeling pretty good about myself. Surely this can't be all that was required for successful trades. I guess there's just one thing to do but roll the dice and keep this thing going. So for my next trade, I bought 100 shares of SILO at $2.55. I ended up selling at $2.59. At this point, I'm starting to think this might be the winning strategy. This didn't have as much momentum as I was hoping for, but overall, I'd have to give myself 3 out of 5 stars. Before we continue, if you're enjoying this content, if you could do me a favor and hit that subscribe button, I would greatly appreciate it. We're never going to sell you some masterclass, so subscribing really helps out the channel. And if you really like it, be sure to tell your friends. But with that, let's get to the final trade. For my last trade, I bought 100 shares of ADL at $2.33. I ended up selling at $2.42. Overall, I feel like this trade had a lot of momentum, and I was able to accurately read it. So for this trade, I'm going to have to give myself 4 out of 5 stars. Now after this trade, I feel like I'm plugged into the matrix and I can see the stock market everywhere. So after applying my method, it seems it works.
This is hardly a surprise.
I'm surprised.
But at the same time, there's something bothering me. Something seems wrong. And that's when I start to look at the real numbers. This took me weeks. So after crunching the numbers, I've come to the realization that day trading isn't really worth the time. At least for now. With the limitations of a small account, you only have a few opportunities every week to take a trade. Combine that with a small share size, that ultimately leads to small profits, or large losses due to unnecessary risk. So this brings me to one conclusion.
Finally, I knew exactly what I needed to do. It wasn't writing. It wasn't books. It was much bigger than that. But it would take money to get there.
I'm going to need more money. But that doesn't happen overnight. So how am I going to get from point A to point B? In the past few videos, I have mentioned another project I've been working on, and that is a dividend account. In the next series, I will be looking into building a passive income via a dividend portfolio, and how long that actually takes. The journey to stupid amounts of money isn't over. And I mean, that's the ultimate goal, isn't it?
I finally had my shot. Wall Street would provide my nest egg. But then how far could I go? CEO? A global force? Maybe president? Time somebody shook up the free world and got things done.
I'm a